quite big audience, so we're going to use the Q&A function today. That's just in the Teams toolbar. So that's the only additional tool that you need to use, and that will allow you to put your question in and enable other people to upvote your question if they have the same question of the presenters as they do. A little bit of warm welcome from me. I'm Hannah Rudman. I'm co-chair of the Scottish Forum, and this webinar series, this is the last in a three-part series called Recipes for Recovery, and we're exploring workable models that leverage private investment to address ecological challenges at landscape scale. We're thinking about the business models, the implementation mechanisms that are needed for landscape scale initiatives to function, and exploring the successes and challenges within each case study. We want to thank Sally Matchett from the Scottish Forum for supporting the series, the Centre for Sustainable Forests and Landscapes at the University of Edinburgh, and the Integrating Finance and Biodiversity programme, which supports my and Julia McCarthy's academic work. So thanks to Julia for the help with the series as well. Today, this session will explore how natural capital finance can help to save Scotland's rainforests, and we're looking at work that the Argyll Countryside Trust and partners at the Alliance for Scotland's Rainforest have done to develop a project standard, an integrity charter, and a business model to aggregate projects together for rainforest restoration here in Scotland, and hopefully facilitate private investment into that. So a very, very warm welcome to Julie Young, who's CEO at Argyll Countryside Trust, and William Hawes of Silvestris, who've brilliantly delivered the work. If I can just say a few more comments about the forum. For those of you that don't know it, it's mainly facilitated by its hubs. The hubs are led by volunteers, people from the sector around focused interests. So the hubs are based around sustainable land management for natural capital, marine natural capital, digital enablers, tech, which supports natural capital projects and markets. And those hubs are busy with conversations and events focused around those topics. Do join them if you want to at this URL you can see on the screen here, naturalcapitalscotland.com. We have been able, through a range of seed funding opportunities from public and philanthropic purses, to develop a number of projects over the past couple of years. That's been through the Facility for Investment Readiness for Nature in Scotland, the Ferns programme, that's channelled almost £6 million worth of Scottish Government and National Lottery funding into projects exploring business models and contracts and operational management methods and so on. The project we're hearing about today is a Ferns grant recipient, and there'll be another couple of webinars in December and February around Ferns projects co-organised by us and Social Investment Scotland. So keep your eyes peeled for them. William is going to present, but first of all, I'm going to show a short film which summarises the project. So do enjoy watching this.
I'm Julie Young, and I'm the Chief Exec of Argyll Countryside Trust, and I'm the lead partner in this Saving Argyll's Rainforest project.
Hi, I'm Philippa McKee, and I'm the Habitats Manager for ACT.
Saving Argyll's Rainforest is a community-centred structure that brings private finance into rainforest restoration in a way that's long-term viable. One of the many approaches that the Alliance for Scotland's Rainforest are taking to find a way of restoring this extraordinary, rare and threatened habitat.
I find these really inspiring habitats to live in, to work in. You're connecting with something that's been there for hundreds of years. One of the features that makes this habitat so special are the lichens and bryophytes that grow here. Some of them are found only in this location in the world. So a lichen is part fungi, giving the scaffold, and part algae, giving the chlorophyll and the ability to photosynthesize. They are absolutely tiny and they are absolutely beautiful.
We've been working in rainforest restoration for 10 years now with partners right across the area and with the wider Alliance for Scotland's Rainforest Network.
In order to make the difference that's required, we need to operate at a landscape scale. And so a few hundred hectares here or there is not going to make the difference we need. It needs to be thousands of hectares. And for that, we need collaboration across land ownerships and we need joined up thinking. This project is trying to raise the finance to make that work viable.
My name's Tom and I work for Palladium. We're helping the ACT team develop the funding model for the rainforest restoration project. This project is unique because of ACT. As the local anchor organisation, they bring the experience of restoring rainforests, the relationships with local landowners and community members, and the ability to draw on the wider experience of the Alliance for Scotland's Rainforest. I'm part of the nature team in Palladium, where we do a lot of the environmental economics needed to understand how to fund a project like this one. So all of the costs involved, both upfront and over 40 years, and how to generate the revenues required to make it all stack up.
Two of the key threats we're looking to address are rhododendron and overgrazing. Rhododendron ponticum is an invasive species. It shades out most of the understory. It spreads at an incredible rate. It's very, very hard to kill. The biodiversity of those habitats is severely compromised. So the other opportunity is to address the high deer pressures we experience in this area. There are too many deer in the landscape and they eat the young trees that are coming through. And as that situation persists, we're going to end up with an older and older woodland and very little chance for saplings and young trees to get away.
So to deliver this project at the full landscape scale, at 6,000 hectares of work, this will cost £50 million over the next 40 years. We can fund that through a mix of public and private finance. Around 10 million can come from existing government support programs, and we're looking to raise 40 million from the private sector. That money will be used for woodland planting, long-term maintenance over 40 years, rhododendron removal, deer management, and paying landowners an income. The new woodland will generate carbon removal credits under the Woodland Carbon Code. The sale of the credits will generate the revenue we need to cover the cost of the project, including paying landowners a long-term income, community benefits, and repaying the investment that we need to get this project started.
With partners from the Alliance for Scotland's Rainforest, we compiled a project standards and integrity charter. The integrity charter helps us to ensure that the buyers of carbon credits are doing everything they can to reduce emissions before using offsets. We work hard to work with communities. We don't own land, which means that everything we do is with the blessing and agreement of the landowners and the communities based in that area. So we spend a lot of time finding a solution and approach that works for all of them. There's a really nuanced model that makes sure that everybody has their space. I do this because I see it as a linchpin to unlock so many things that are important to me about climate change, about population drift from isolated rural areas, about people really connecting with the outdoors and the difference that it makes to them personally, their own well-being, the way people interact with each other and the place that they live. And rainforest is the key to all of that for me.
Beautiful. What a delight to be able to go there through the video. William, I'm going to stop sharing and hand over to you next.
Thank you, Hannah. I think someone's going to share for me. Oh, thanks, Julia. I'm going to say hello and then turn my screen off because I've just learned.
Sorry, everyone, for that glitch. I just changed one of the controls accidentally. So, William, you're going to have to turn your, I'm going to have to turn this back on for you. There we go. Sorry about that.
Great. Thanks, Julia. I was just saying I've not got a very good connection, I don't think, and I'm worried that if I have my camera on and try and speak, some of it might get cut. So I'm going to let everybody concentrate on my slides, turn my camera off now, and go through the presentation if that's okay. And I'll flip it back on when we get to questions so everyone can see me again. So that was a brilliant introduction to what has been a big and complex project. And as Hannah said, it's taken a lot of work for us to get to this point. I first met Julie Young and the ACT and some of the ASR team probably 2 years ago now, when this idea was born. Could private finance play a role in bridging the gap between the cost of restoring Scotland's temperate rainforest and the available public funding at the time, which hasn't really changed since, i.e. not very much. We applied to Ferns not long after with the outline of a project, ACT being the lead organisation as an ASR partner, focusing on a pilot for the business model that we've created that I'll describe in more detail during this presentation in South Knapdale, to help us understand what ecosystem service or services would best help fill that gap, what the which partners should be involved, and the viability, the financial viability of the model that we eventually came up with. So Julia, if you could flip to the first slide, I'll get going. Thank you. Brilliant. So the first question was, is it even possible that natural capital, i.e. ecosystem services, could generate some revenue to bridge that gap to restore rainforest? And restore rainforest means predominantly the removal of invasive non-native species, mostly Rhododendron ponticum, and the reduction of herbivore pressure, mostly increased deer management in existing fragmented rainforest. The benefit of that is enhanced biodiversity. And so the obvious choice for an ecosystem service to build a model around was biodiversity credits or units. But we all agreed quite early on in designing the project that there wasn't any real indication that either a voluntary or a compliance market for biodiversity units was going to develop anytime soon, and therefore building a model around one of those or both of those didn't really follow logic. So we had to decide which was a suitable alternative, and the most suitable alternative, albeit imperfect, was woodland carbon. And those of you that are into the detail of the woodland carbon code will know that there was a problem with the restoration of existing rainforest using woodland carbon, because woodland carbon units are only generated by new woodland. So we thought there was still some sense in using woodland carbon from new woodlands, which would be strategically located to connect existing fragments of rainforest, because it is so fragmented, to generate a revenue that we could then invest back into not just creating and maintaining those new woodlands, but also restoring the rainforest, which, as you'll hear through this presentation, requires a premium to be paid, acknowledging the biodiversity benefits outside just a new, over and above just a new native woodland, to be paid for those PIUs or verified units. And the governance structure of this project was important, I mean, critical, really. So it's not just a single holding project whereby, and most of you will be familiar with this, you have a holding, you have a project, some new woodland or biodiversity to restore. You might have a specialist project developer or designer, an owner or their representative, and a prospective buyer. That, compared to this, is relatively straightforward. Here, we wanted to make sure that the range of expertise of ASR are represented in any project management structure. A local anchor institution were also included to make sure that the community and the needs of the community and the prospective benefits that could be delivered by the project were properly understood. In this case, ACT brought all of that, but not only that, they actually have direct experience and track record in rainforest restoration, and then the technical skills from a project developer and the finance partner, be that an investor or the purchaser of woodland carbon units. And then we piloted it in South Knapdale. So we, having built this model, which I'll touch on in the next couple of slides, we ground truthed the potential for new woodland and the cost of restoring the rainforest in Knapdale to make sure this model actually really worked, and engage with the landowners to understand from them whether what we were proposing was an attractive prospect commercially. Thankfully it was, but we'll come on to that. Julia, thanks. Next slide, please. But before we could start that work on building a model and the finances and engaging with landowners, we needed to make sure that the Alliance could put its name to this project. And the Alliance is a big beast. It's an umbrella consortia of ENGOs mostly, and other communities of interest in temperate rainforest. And we needed to try and find a consensus on two things, really, to make sure that everybody felt comfortable that engaging in and participating in natural capital markets was appropriate for all of those organizations. So as I said, two main concerns. One is that natural capital markets drive suboptimal ecological design in projects. And that is to say, in the case of woodland, you would generate a high yield of carbon credits if you planted the few species or even single species subject to new woodland creation regulations that grow the fastest. And that's not the same as designing a woodland that is native and appropriate, particularly that has the best chance of developing rainforest features in the future. So we consulted with all of the ASR partners that had an interest in this to create the project standards. And those project standards are a design brief, partly for community engagement, but mostly for the ecological design of both restoration strategies, but importantly, new woodland that would then generate these woodland carbon units. It's 50 pages, so it's quite a document to wrestle with, but it's very good. It's very clear and beautifully designed, and you can get to it through ACT's website. The second was the Integrity Charter. Everybody on this call will be very familiar with the anxiety that there are around the ethics of natural capital and ecosystem services and corporate sustainability claims in particular. So we went through the same process with the same partners to make sure that we had a checklist, basically, a set of checks and balances that we would apply to prospective investors and buyers of ecosystem services to make sure that they ultimately value aligned with ASR, including things like making sure, as Julie said in the video, that they have a credible net zero strategy which prioritizes emissions reductions over offsets, that they're divested or divesting from other high emitting and environmentally damaging sectors, that they don't lobby against positive climate action and policy, that they have a good track record on human rights and as an employer. That took quite a long time, but it was a really, really good piece of work, and it did galvanize the ASR partners around this project, and hopefully sets a bit of a benchmark for the wider sector that other people can follow. Next slide, please, Julia. So that's South Knapdale. And on South Knapdale, there's around 2,700 hectares, I think, Julie might correct me, of existing rainforest, which is in need of restoration. There's also around 2,800 hectares of potential for new native woodland. So broadly equal amount of existing rainforest and potential for new woodland to try and connect it up and generate that critical or vital revenue to fund this project. The next slide has the breakdown of costs, which I'll touch on, but at a top level, to restore all of that rainforest and create the new woodland, maintain both over 40 or so years, would cost just over £50 million, 52 million. That includes project management, community benefit payments, which I'll come on to, project development and technical compliance with the various codes or the Woodland Carbon Code. Whole project cost 52 million, against which you would be able to receive around 10 million in public grant. That's FGS Forestry grant scheme only for the new woodland elements. for the capital cost in the first few years. So a funding gap of 42 million. So that was the number we were pursuing. We've got to try and get to 42 million from other sources, in this case, private finance. Thanks, Julia. Next slide. I won't dwell on this, but it's just to prove really to you all that we did use the Woodland Carbon Code calculate, having ground truth the potential of that the land with the new native the land that had potential for new native woodland. We using ACTASR's network, an appropriate species mix, and an appropriately low density and an appropriately low yield class, i.e. how fast the trees would grow, to work out how many carbon units over those 40 years would be generated, which is just over 560,000 in 40 years. Most of that from planted woodland and a small proportion from naturally regenerated woodland. So if we embarked on spending that 52 million, net 42 million, you'd generate 560,000 tradable woodland carbon units. That's after the Woodland Carbon Code applies its risk buffers. Thanks, Julia. And this is the cost breakdown. I've highlighted some of those that are interesting. I haven't got time to run through them all. Deer management over a wider area, not over the whole peninsula, but over areas in and close to woodland that would need protecting. That's new and existing. Was about 5% of the total project cost. The biggest project cost was rhododendron ponticum removal, 25% or nearly 13 million, which is an indication of how big a job restoring Scotland's rainforest is and how serious infestation by non-natives is. Landowner payments were the second biggest cost, just over 20%. And there isn't a slide on this, so I'll just touch on it now. But the proposed terms with landowners, which they broadly thought was sensible, was to pay a fixed area rate per hectare for land contributed to be changed into new woodland. So it would be mostly grazing and agricultural land on Knapdale at the moment, at a rate that was just higher than the current basic payment plus greening that they'd receive, index linked for the 40-year contract duration. And most of that was sensible because the carbon market is quite hard to navigate and volatile, if not weak, but that's stealing thunder from my last slide. And almost all of them said that they are worried about the uncertainty of future agricultural subsidy support and commodity values, and to be able to have a large or small area of their holding with a guaranteed income per year linked to inflation was really attractive. So that was useful. So we progressed to discussing detailed heads of terms with the largest landowners of Knapdale, and that gave us confidence that should we be able to raise the investment, we would be able to find landowner partners. And then finally, there's a community benefit payment built into the project costs. It says here 6%, I think it's 5 point something, but it's just less than 3 million. And that number as a percentage was really, to be honest, a little bit finger in the wind based on some other projects, natural capital projects that have had community benefit funds. There isn't much precedent for this. It isn't to pay for a particular thing, but also part of this project, we generated a community engagement and benefit roadmap. So we have modelled what the community is and the community of interest. We've tried to understand from exercises that have already been undertaken what the community's needs and aspirations are, but we would, if this project raised investment, then go and engage with the community proper. And because of this 5 or 6%, we have built into the project costs some money that we would be able to distribute, maybe just in cash to the different community groups there are on Knapdale, or maybe in other ways to create greater impact. But it would be down to the community how that money was spent and where. Thank you, Julia. So you've got that 42 million gap to fill, and these are the ways that we thought about filling it. The first was with investment, and investment means a private source, well, in this context, means a private source of funds coming in and providing that that capital and working capital that this project needs. There are two ways of doing that. One is through debt and one is through equity. Debt is quite straightforward. It's imagine a loan or any of our mortgages. You are the lender lends the project the money and you pay them back over time with interest. The problem for debt and natural capital projects is that it requires pretty much instant cash flow. Some lenders might give a grace period, but probably not long enough for the project to really start generating revenue to be able to cover the cost of whether it's just interest or capital and interest payments. These projects take years before you have even validated units that you might be able to trade, or certainly, I mean, you're decades before you have verified units, i.e. carbon credits that have crystallized and are then reportable and therefore likely to be higher value. So debt really got discounted on that basis that the cash flow of this project couldn't afford the interest payments. Or the other, more suitable, equity. So for the 40 or so million pounds, the investor owns a share of the project and therefore owns an equal share of the profits whenever those are realized. That's very useful, not just for the cash flow, but also equity investors would share in a greater proportion of project risks for non-delivery or underperformance. And in this context, that means the tree's not growing or growing more slowly and there being less carbon than originally anticipated, or carbon prices are lower than originally anticipated. The equity investors would share in some of that. So equity investor under the investor model, looking good. Buyer model was another option, and that is, as is often the case at the moment, where there are transactions around nature-based carbon, the sale of PRUs upfront. This project needs that money upfront to make itself viable. So we could sell the PRUs. I think that last slide actually said, or a slide before, that the cost of a PRU to cover that 42 million would have to be £84. In fact, that's wrong. It's 70 something, £74, I think. Selling 560,000 PRUs is a very difficult thing to do. In fact, I'd say at the moment it's impossible, and certainly at £74, even with the co-benefits of rainforest restoration and positive community impact. The other issue is, compared to an equity investment, selling those PRUs creates some potentially pretty hardcore contractual liabilities for non-delivery and underperformance that with an equity investor, the project would be relieved from, or at least to an extent relieved from. So not only would it be very difficult to sell PRUs at that price in these volumes, also contractually would be less comfortable for the project's governance. Finally, philanthropy, which was quite quickly discounted, but we still have to look at it. The point of the Ferns project was to investigate private finance as a solution to this funding gap. And that really assumes that philanthropy isn't available at this scale, which speaking with the ACTASR partners to make sure we'd considered that was indeed the case. So 42 million, not realistic prospect from philanthropy at the moment. Julia, thanks. Next slide, please. I mentioned in the first slide, slightly garbled way, that we had to look at the governance structure. What I didn't mention was, I did touch on the partners that would have to form part of that governance structure. I didn't mention that we had to think quite hard about what it would be. And some of the options for constituting it were things like a community interest company, a limited company, a cooperative, a partnership. And we took advice from Safries, who some of you will know as being finance whizzes, and they are. They gave us a very good report on our options with a recommendation that a limited liability partnership would be most suitable. It's most suitable because it does offer some limit on liability. Harking back to that previous slide, not all of the project, well, not any of the project partners, but particularly some of the project partners, ACT or any other local institution, wouldn't really be able to accept all of the risks from a major project like this, which is inherently risky. And this an LLP offers some shelter from those. It's transparent for tax. So any of the partners in limited liability partnership, it's they call it looking through the partnership. They're taxed on their share of profits based on their own entity or individual tax circumstances at their prevailing rate. That makes it straightforward. An LLP can have very flexible governance structure, which this would need between landowners, project developers, again, ACT, investors and potential buyers. And for landowners, importantly, we would be able to structure the relationship with them through an LLP, which is IHT neutral. Less of an issue actually now towards the end of the project than there was at the start with the changes in agricultural property relief and business property relief. But many of those structures many of the structures and ways of contracting that would pay landowners a fixed rate per year would be considered rent, and therefore would be negative for them when calculating the relief they could have from inheritance tax relief. Through a limited liability partnership, it's neutral, so it doesn't contribute negatively, nor does it count as trading income, but not contributing negatively was sufficiently beneficial for most landowners to still think this was a good idea. So we're running out of time a bit, so I won't run through where all the arrows go in this limited liability partnership model, but you might have had a chance to look at it while it's been on the screen, and I'll answer any questions at the end or even after. So what sort of return do you get then if you are an investor in this project? Not a massive one, quite a modest one, actually. But speaking to institutional investors in modeling this project, 7 or 8%, which is what an initial investor could expect to get. And by initial, that means you are putting in that first capital. It is a riskier project then because the trees aren't planted, the rainforest is not restored, the trees are then not established. That takes a number of years. So you're accepting more risk. You could get a return of 7 or 8% IRR. That's net, so that's after fund managers' fees. And that is, for context, at the very lowest end of what some of these institutional investors will accept, particularly with a level of risk. But it was sufficient. And because it has real, genuine, positive environmental and societal impact, there definitely would be investable. And the model, and I didn't mention Palladium, sorry, Tom was in that video, that's been built mostly by Palladium was what these investors call investment grade. So they accepted it as being effectively ready to go. It had high levels of detail and had been validated by Safries. The problem is the risk around future revenue generation, which will be my final slide. But then there's this thing called an acquiring investor, which is 5%. And the idea behind that is that if you're an initial investor, you put in the initial capital, you get your 7 or 8%, you take the higher risk, and then you probably, once the trees are established, want to realize the value of your investment to get that 7 or 8%, you sell your interest on to an acquiring investor where there's much lower risk because the trees are planted, you see they're growing, you'll know more about the carbon market and its costs, and those expect to realize about 5% return. And this is all based on the future sale of verified units. So if you're an initial equity investor in this, you accept that you're going to be some years away, 15 or so, from generating revenue because it's selling verified units in the future. And the carbon curve that we worked on was based on all of the credible data that we could pull together from different organizations who are making predictions over the value of nature-based carbon in the future. We started at a base price of around £46, which still reflects a premium, which is not realistic, and increase that at 8% per annum throughout the life of the project. So we didn't think this was a particularly optimistic carbon price curve, which is why you end up with a 7 or 8% return. If the carbon market ran higher than that, or if there was a better premium for the biodiversity co-benefits, then the return would be greater. Of course, the opposite would be true if the carbon market didn't accelerate at that pace, or even worse, as the next slide touches on, collapses. So that is the investment return and cash flow. Finally, next steps. We're doing this presentation without the project having investment because the big issue is that the carbon market is suffering, I think, a bit of a logjam at the moment. There isn't the demand that there was a few years ago for carbon credits. A few things have changed. The political will around net zero has cooled. Inflationary times have meant that the cost of everyone doing everything, including businesses running themselves, has gone up. That leaves less for discretionary spend, which while carbon is voluntary and net zero is voluntary at a corporate level, this all still is. And so whereas even when this project started, we had a more optimistic outlook on demand, that has tailed away. So investors would say, hey guys, this is great. Yeah, 7 or 8%, we're quite up for that. Feels a bit risky, but we can handle some of those biological risks. But are you going to be able to sell these carbon credits? And they don't feel convinced that that's possible. And I can understand how they've reached that position. So without more demand signals from the market for future offtake, i.e. buying these carbon credits, it's not going to release this capital investment that is out there and available. So the conclusion of this project was, what do we do next? And some of the recommendations, 3 I've listed here. One was that CFD is an acronym for Contracts for Difference. That's taken from a model that they've used in renewable energy projects for some time, where developer designs a project. It says, I would need this minimum spot price for future energy per megawatt hour generated by the project in order to be viable. And they pitch into the government. They have these pots that open up from time to time. They pitch in with that price. And if the government thinks it's good value for money, they fix that price. Anytime the market dips below that price, the energy is sold to the market, and anytime it dips below that price, the government make up the difference. And when it's more, the government keep the profit as a return on their risk in fixing that price over time. That would work quite well, we think, if you did it with natural capital projects, generating carbon credits. Another one is the Scottish Government could generate the demand themselves and buy these PIUs in a way of repurposing capital grants. They might reduce the capital grants and spend the money on outcomes by purchasing these PIUs at the price that the project needs to be viable. And then in the future, if they think, as it looks like they do, the value of carbon is going to be in demand, and therefore the value will rise in the future, they will make a return on that public spend. And finally, might not generate the scale we need for this project, but another option is to increase demand via procurement. So, for example, if the government put out huge procurement projects like they do, the A9 construction or whatever it is, if you want to be considered for the contracts, then you have to have a net zero plan, and maybe you even need to have some carbon reduction or neutrality targets around the specific project that is being funded. And therefore, those contractors or consultants or whatever it may be to the government would have a demand for carbon credits, and that would drive some demand to hopefully crowd in, as they say, some investment into this project. I think, Julia, that is me, and I'm ready for questions.
Fantastic. Thanks so much, William. Really clear presentation. And of course, the first question is, are the slides going to be available? A reminder that this is being recorded. So of course you can watch back and pause and look at the slides that way.
Yes, I think we can do that, can't we?
All right. And I'm going to ask questions that all the participants have kindly been thinking about and putting into the Q&A. First question from Penny around the landowner payments. Were all the landowners private landowners, or were some public sector or community sector land managers?
Julie knows NAPTA better than me, but the ones we engaged with most were private landowners. I think, Julie, FLS own land on Knapdale, most of it though, which will be forested already and therefore not necessarily or not possible for new woodland and therefore woodland carbon credits, but all of the landowners that this project directly engaged with were private.
Julie, anything else to add? No, you're nodding. Great, thank you. Okay, so I'm going to ask a question from Louise next. Woodland Carbon Code is obviously the scheme that we use to do all the modelling. Was there any consideration of other schemes, you know, for example, wilder carbon?
No, there wasn't. To be honest, we considered all We considered other available options, as I said early on in that presentation. I think the important thing, I'll come back to the Wood and Carbon Code, but the important thing about this model was we always constructed it to be agile. So you could plug in any ecosystem service at any value, if there was a different value to wood and carbon, and the function would be the same. However many ecosystem services of any particular type you generate, at the market price, you'd work out whether that was sufficient to make this project viable. The challenge was, and I think the same applies still at the moment as it did then with Wilder Carbon, is despite what I've just said on that last slide, we had to feel that there was a route to scale here. We had to be able to sell hundreds of thousands of whatever ecosystem service it was. And the Woodland Carbon Code was the only relatable ecosystem service standard, if you dismiss peatland because it's not relevant in this context, that looked like it had any chance of getting to that. So if Wilder Carbon, for example, were to demonstrate that they could create that scale of demand, then you could quite quickly alter the model and you would validate projects under Wild Carbon instead of the Woodland Carbon Code.
And this question's probably related as well from Eleanor. We're seeing a lot more examples of supply chain initiatives funding wider benefits like biodiversity, water, mixed in with carbon. Have you explored the potential of creating insetting to provide funding?
I probably need a little bit more context on the question, but I think when we thought about that at Knapdale, or indeed any of the rainforest zone, there aren't many supply chains by big business that are really impacting those habitats negatively. It's just a legacy of probably inappropriate management. So yeah, that's a bit of it. That is, I think, probably not a route for the rainforest project. So for example, we thought about things, biodiversity. We really thought hard about biodiversity units because that is the primary outcome of this project, and looked at the potential demand for biodiversity in those locations, and it's low. So you might have under NPF4 the biodiversity enhancement provisions of planning policy, but there's just so little development in those areas to make it geographically proximate and therefore appropriate to use mitigation. And there's so little demand for voluntary biodiversity, or maybe none. And the main reason for that is, in my take, when these big corporates are tracking their supply chain impacts, none of them are on the west coast of Scotland. And so as they follow them down the line, they'll, I hope, pursue and fund mitigations that are close to source, and often those won't be in Scotland or even maybe the global north.
Yeah. The next question that I'm going to ask is from Annabelle, and Julie, this might be one that you want to answer. It's about whether you engaged the community when you were developing the integrity standards and principles.
Thanks, Hannah. Well, we engaged with the Alliance partners who themselves sort of represent a lot of the communities of interest. And obviously, we are, ACT is heavily involved with a lot of community groups here anyway, but there's a large section within the project standards about community engagement. And we also, as William said, we kind of commissioned a route map for who we should engage with. But just because there were we didn't want to raise expectation basically about what community benefits might be available. So without being a little bit further down the line of when this might be deliverable, we just have a plan ready to implement rather than actually going out to, and also communities like ours, like many rural communities, we are quite over consulted. We're often asked what we would like, and so we just wanted to hold fire on that until we were a bit closer to delivery.
I mean,
Annabelle's question, which set of standards was it about?
It was about the project standards.
It was the project standards. Okay,
yeah.
cool.
Yeah, and I mean, you know, brilliant to see the sort of 5% plus in the business model there anyway. Sheila's got a question about whether the standards align with international ones, such as the ICVCM, International Council for Voluntary Carbon Markets, core carbon principles.
I think that's probably more an issue for the Woodland Carbon Code at a ecosystem service standard level, and it doesn't, which is a bit of a problem for demand, international demand, I think. So not directly linked, I don't think, our project standards to the IVCMI, no.
But Woodland Carbon Code might be going through that
It might be.
process at
Hopefully
the moment,
it will.
I think.
Hopefully it will. That would be great.
Yeah.
That would be great.
All right. Let me just scroll through.
I think just on that, while you do, Hannah, to answer the question more fully, because the project standards aren't an ecosystem service standard. They're a set of design principles for new woodland and the restoration of woodland and the new woodland to be validated under the Woodland Carbon Code. So it's the Woodland Carbon Code that needs to be recognised as eligible.
Yeah, that's my understanding as well. A question from Anna about if you can bring in other benefits like water resilience.
Perhaps. I actually honestly don't have a feel for the water resilience of Knapdale. I don't know if you know if that's an issue, Julie. I've not heard that it is.
No, I
Pretty wet,
don't
isn't
think
it,
so.
South
Not,
Knapdale?
no, not particularly, no.
Okay. I think that's probably most of the questions in the list. Kath, I can just see yours come in and Rachel, so we'll press on with those. Kath wondering whether other sources of funding, such as philanthropic funding, can also be fed in when the corporate structure, the governance structure is a limited liability partnership.
Yeah, that was one of the benefits of an LLP is that you could, and that is so the 42, and we're pursuing that. So the 42 million is the gap between FGS and everything else. It's not inconceivable that we might be able to find different pots of funding that can feed into some rhododendron removal, some deer management, or other interventions that we might make. So that's a good question. It was very, very important that we could receive all forms of alternative funding other than just private finance through the LLP, because it would be a great way of reducing that gap or reducing the premium that would be required in a PRU sale.
Brilliant, thanks. And Rachel just asking who was contracted to perform the verification process, presumably the Woodland Carbon Code verification.
Yeah, no one yet. I guess as that we haven't really been able to launch the project because we're lacking the investment, but we would be flexible on that, I think, with the landowners in particular. If they have what we didn't want to do was crowd out local agents and consultants. So if any of them had their own woodland designer agent for Woodland Carbon Code or whatever it might be, then it was available to them that they could use those people, providing the project standards were met and followed. Otherwise, they hadn't been appointed, but we probably would appoint a project-wide validator and verifier if we got to that stage, but we wouldn't impress them on landowners.
Great. Any final questions to add in? I'll just get colleagues to double check that they think I've gone through. Phoebe, you've put your hand up, but I don't know if we're going to be able to unmute you. Yeah, Julia's going to unmute you. Thanks, Phoebe. We'll come to you just as soon as we've done that.
Phoebe, you should be able to unmute yourself now.
Yeah, thank you. I don't think I can turn my camera on for some reason. Anyway, sorry, I'll be quick. I was just wondering, in terms of finding potential buyers, how have you or could you go about doing that? It seems to me there isn't a sort of central platform or an easy way for project on the ground to find corporates or investors who might be interested.
You're right, Phoebe, there isn't really. So it's not very sophisticated, but we've identified corporates and institutions we thought big enough that might have the sort of scale of demand that this project requires, that have well-formed, preferably SBTI approved net zero strategies. And so therefore we know we're signaling out in effect to the market that they're going to need some offsets if they're going to get to net zero, and directly contacted them.
Okay.
We wish that it would be great if there was a better way, but that, you're right, the market just sort of isn't liquid, isn't operating in that way. Every deal, the few that there are, is very, very bespoke and tend to be one party just contacting the other directly and hoping for the best.
Yeah, I mean, the only other kind of thing that's happened just recently at COP30 was that TNFD announced an uplift in the number of companies that are going to make disclosures around nature, and I guess they might have a further demand. So I think there's something like 750 companies, including a number of Scottish ones, now saying that they're going to be making those disclosures. So I guess we could put them on our hit lists as well.
Thanks, Hannah.
Any more questions? You can put your hand up because Julia can unmute you if you'd like to speak it into the session. And I think there's a new one just typed in. When do you think the project... Sorry, I'm reading that wrong. Did the project consider a financing model that might cover revenue streams from buyers of avoided outcomes, or was it just buyers of ecosystem credits from newly created woodlands?
I think that's maybe asking, well, if I'm understanding it properly, that might be asking, there are ecosystem service standards out there for woodland carbon, biomass in woodlands that are based on carbon not being lost. I don't know, but my guess would be we might not pass the eligibility of some of those standards because it really isn't. It's inconceivable that any of these woodlands would ever be cut down, for example. So I might be misunderstanding the question, but I think that would be difficult to square away because we wouldn't be deforesting.
Yeah.
So would we pass the additionality test of those codes? Not sure.
Yeah. And Kath was just wondering when the LLP might be set up.
Oh, well, we wish. Not until it looks like there's an investor or a large-scale buyer, I don't think, because they would probably be part of it and therefore want to have a hand in its terms and its constitution.
Yeah.
So I don't want to misrepresent the huge amount of progress that's been made, and this is genuinely investment ready. It's a sort of term we band around quite a lot, but the key message is here really that investors don't see this as investable because they don't believe that there's going to be sufficient market for nature-based carbon to allow them to take the risk of investing at the moment, and that is where those recommendations are being filtered up to Scottish Government, because we think there are interventions that they could make which would release the private capital that they're hoping comes into the market or sector.
Yeah, and that could either be through those sort of voluntary methods that you've suggested, or through some kind of compliance mechanism.
ETS, yeah, you've heard of the trading scheme for heavy emitting industries, definitely.
Anna, I think your microphone is probably available for you to use if you want to speak your question in.
Yeah, thank you, Hannah. Hi, William. So great to
Hiya.
hear of this, because we haven't had a ferns bed, and so we can learn from your approach, and really good to know. I am asking a really basic question, and it's about maths and pie charts, I guess. But if you don't have a big spend on ends, right?
Yeah.
Is the pie chart just that slots out of the pie chart? Are you still looking at a similar kind of value of investment coming out?
No, it would. You're right, I think, Anna, in saying that if you took out that, I can't remember what it was in millions now, but 25%, then the cost would be reduced by 25%. I think that would mean this project doesn't deliver on the spirit of itself, which is to restore the rainforest. Just
Oh yeah,
because,
yeah,
but
totally.
yes, if
Sorry.
you were just looking at your question, if you were just doing a native woodland creation project, well-designed new woodlands, then yes, you could slot that out, and that's sort of what you'd be left with.
Yeah, because there isn't rhododendron. I was just looking at the map, and there isn't rhododendron in our patch.
Right,
Yeah.
so there's Anna coming in with a competitive offer right at
Yeah,
the
don't
end
let anyone know you've
there.
got a much cheaper project, please, Anna. That would
It's
be
a
a
much,
disaster
much
for us.
cheaper project. Not maybe as glamorous. And I've just been to Killarney actually, and they've got massive, massive problem with rhododendron. So there's a sliding scale, isn't there? But I'm just wondering about the pie chart. Thank you.
Yeah, and upcoming, there is going to be a summit on how to finance invasive non-native species like rhododendron ponticum and others on the 1st of December coming up. So we'll report back into the forum on the outcomes of that. But I'm going to draw the session to a close because we're just about to hit 1 o'clock. Many, many thanks again to William, brilliantly clear presentation, and to Julie for managing all of the work, and to Sally and Julia for supporting us making this presentation. Thanks to all of you for your time and your questions, and we'll leave you to the rest of your afternoons. Thanks, everyone. Bye.
Thank you, guys. Cheers.